All right, now you're hearing about this sort of ominous, intricate relationships, artificial intelligence, the industry, and this vendor financing or circular financing, and now people are bringing up Lucent. For those who don't remember the dot-com era, this was a darling, an absolute darling. So Lucent had $15 billion in vendor financing, only $300 million in cash flow, operating cash flow, and essentially it had two customers, folks. Two customers were 23%. Some are saying, well, golly, sounds like Nvidia, right? Nvidia, obviously they do very well, but the vendor financing, $110 billion, two customers, 39%. So you hear this sort of ominous stuff out there. Then if you throw in OpenAI into the mix, some say all of that's sort of the cauldron of doom. Now, my next guest is on the show with us the first time, July 31st, and he told you, listen, it's just the first couple of pitches in the first inning with this AI game. So let's bring in Monness, Crespi, their global head of internet and software equity research, Brian White. All right, Brian, here's the latest chart. The intricate weave, is this sort of, this isn't a web of deceit, though, is it? It's just complicated stuff.
This is a great analysis. And I went through the dot-com bust. I was in a Lucent factory at the time with massive inventory piling up. I think the difference is the companies that are pushing this AI boom have a lot of money on the balance sheet, and they generate huge profits. And that's the difference.
And they also have access to a lot of money. I mean, this is a retail-driven kind of thing like the dot-com era stuff. Was there anything nefarious back in the Lucent days, or was it just mismanagement?
I think, well, back then, it was a little bit more of the Wild West, right. I would say, back then.
Right. I remember.
But you look at the cash flow. I mean, Nvidia generates, you put up $15 billion, and Lucent had $300 million in operating cash flow. It's a big difference.
I remember in our office, we took out a whole floor down on Wall Street, and we had spools and spools of fiber optic. They told us we needed it. We paid a lot of money for it, and it just sat there. So let's talk now broadly, macro themes. I know there have been some conferences. Some themes have emerged in the recent quarter. Strengthened big cloud. What is big cloud?
So when I look at that, the three top cloud players, you could even throw in Oracle, the top 4 or 5.
Okay. Strong consumption trends. What does that mean?
Data consumption. So, look at companies like Datadog, Snowflake. Customers, instead of buying seats like with Salesforce or Workday, a SaaS seat based, it's how much data did you consume, and that's how I pay you. So it's based on what you use. And so that consumption this quarter was very, very strong.
I want to move on to your picks, but you just brought that up, the seat-based SaaS. I had a couple of people this week say they like Salesforce. I don't think they know this industry better than you, though. Would you buy Salesforce right now?
Yeah, we have a neutral on Salesforce and Workday.
So that means no.
Yeah.
Not right now. All right. You sent a lot of stocks over. I broke it down into household names and non-household names. Amazon, Apple, Meta, for those listening on radio. Pinterest. I've got to ask you about Pinterest, right? A few years ago, it was going to be taken over. The stock exploded. No takeover. Stock crumbled. I've lost track of it, even though I still think I own it.
Yeah, so, it's cheap, 15 times earnings. It's a turnaround story, and they have new leadership, and they've done a good job. That's kind of the story there.
You know what? Leadership is all you kind of need sometimes. Non-household names, Elastic, Mongo, we talk about it a lot on this show. Snow is killing it today. Also, though, I got to give you props because I forgot to put this down. Datadog is like maybe the top percentage gainer.
Yeah, Datadog surges.
So Dog is up a lot today, and Snow's up a lot today. What's going on?
So I think, you had this sell-off, risk-off. These stocks started to break out in April. And you had a pullback yesterday, but it's a continuation of the trend. These are all data consumption companies. So it's a usage-based model. And I think, when you look into the cloud, none of these companies have AI premium. That's what I like about them. Fundamentals themselves are very strong. AI's icing on the cake.
Right.
And so that's going to come in the future.
The hype factor hasn't even kicked in just yet.
Hasn't kicked in yet.
Right.
These stocks, and by the way, when you look at 4 out of the, when I put Datadog, Snowflake, MongoDB, Elastic, they're down 40% from their peak, which occurred in 2020, 2021. There was a software sell-off. And so they haven't really bounced with
Right.
the big tech
Right.
bounce that hit all-time highs, right?
I love those charts too. Then when they fall apart, they kind of drift and they start to make that turn and break out. That's always a great buy signal. Great stuff, Brian.
Okay.
As usual, you're killing it. We appreciate it. So we're okay. AI still first quarter, it's the first inning.
It is. It doesn't. I mean, just like dot-com bust was still early, though, right?
Right.
So it doesn't mean it's not frothy. It doesn't mean there can't be a sharp downturn. But I'd rather stick with companies that don't have these massive AI premiums.
I got you.
That's how
Good
we're
stuff.
looking at it.
Really appreciate you.